All right, welcome everyone. This is Bob Maury. It is Wednesday, the 22nd of January, around about 2:30 my time. I want to do an update of the current seasonal futures spreads strategies, see how things are looking for the ongoing spreads. And then also I have a couple new ones to introduce to you. They started in the last couple days, but haven't gotten to the entry levels, so we'll take a look at those also. All right, so without further ado, let's hop into the portal. And you'll see the most current PDF version right there, uploaded just a bit ago for this week, the week of 119. Here's what we got working. So 342 bear spread, but we've been looking at this since Christmas Day. I'm recommending that we cancel it. It pretty much did what it was supposed to do, but unfortunately without us on board. So we'll take another look at that June, July. There actually is some data that points to it continuing to work, but when I was trying to size up that data relative to the move that's already been made, wasn't completely making sense to me. So I did not revise this current one lower. Anyway, we'll take a look at that one. 343 bull spread in the May July RBOB unleaded gas got filled today. Look at that one. 344 is a new one I'm recommending. It is the Coffee See the World Arabica price. May versus July coffee futures, and then another bull spread in live cattle, Feb June. That one also. That's where we're at. Ends of the sheet. Now let's look at the chart. So first things first, let's take a peek at this lean hogger. All right, so this was strategy number 342. We've been staring at it since, like I said, December 25th is when the seasonal started, but December 26th was the first trade date after that holiday. We were looking for price improvement, trying to pick it up at positive 45 here, and maybe positive 95 on the more conservative side. We weren't asking for a whole lot, and yet all it did was kind of move sideways to lower. So out of the gate, broke, held this white line, the 200 period moving average, got back up to about the benchmark of negative in nickel, and then over the last 4 or 5 trading days, slid on down and through that first target. So it basically did what it was supposed to do, but unfortunately without us on board. So I'm going to recommend we cancel this one and we'll look for another opportunity in this June, July. There's been amped up volatility in the hog market and in the pork complex due to a number of reasons, but nonetheless, I expect continued volatility and hopefully there'll be another opportunity just down the road where we can try and take advantage of it. All right, so 342 cancel. We're out of that one. All right, so now we got the one ongoing spread and the RBOB unleaded gas. This is strategy number 343, May versus July. Blow this up a little bit here. So it started out at 456. That's where it was benchmarked back on Jan 2. Market slid down a bit, started to rally. We needed it to break on down first, though. And luckily, over the last 5 or 6 trading days, it did so. So we're in at 347. Today's low was 346. So got it by one tick. We'll see if that holds. White line here is the 200-day moving average. In my experience, markets tend to react around it. Now, maybe at most it'll give it a bounce and then continue lower, but nonetheless, we'll see if that holds a support. That would be lovely for at least those who got in at level 1. So level 1 is filled. Level 2 is not filled. That's down here at positive 300. Stop is at 221, and then our target's at 568. So if you did get filled, you should be looking to place your target. Make sure you got your stops working all the time. Go ahead and place that first target at 568, just in case something unusual happens overnight, and maybe we can get that. All right, so this one is filled, at least for level 1. No change to the strategy. Currently sitting with a very modest, unrealized gain at the moment. All right. And then we've got new strategy number 344. Okay, coffee C bull spread. Long the May, short the July coffee futures. Margin requirement will be on the PDF. And we're looking to get long. Now, the back data on this one normally shows some pretty modest level of unrealized loss. In other words, the worst it could be against you, typically over the last 15 years, is modest. But because of the volatility in the spread being rather unusual, see here, back in September, October, it was about a, say, $450 range, high to low. And all of a sudden, this thing exploded as coffee futures took off to the upside. So, out of respect to the volatility, I've widened out the entry levels to more of a technical support area that I believe exists. And that would put us in at buying it, trying to buy it at 490 and then down at 310. Stop is at $2. Risk reward would be here, depending on if you're an average in trader, picking it up at 490 and 310, or if you're just the more conservative entry level, you're down here at level 2. So looking for this thing to dip and then rally back up. Okay, 310 is, hate to say it, but might be a little bit out of play. But although there's a pretty long window here and coffee's pretty volatile, 498 looks a little bit more doable. Targets up here at 715 and 815. Even if this thing rallies, I want to continue on with the spread because the tendency is for it to break a bit before rallying again. So I wouldn't necessarily count us out. I'll take it day by day and reassess every week. Let you know if I want to cancel it. But if it does rally up, don't necessarily, at least in my opinion, think that the trade is off. Trader's prerogative. You can always do what you want to do. All right, so we are looking for a break down to 490 or 310. Stops at $2, 2 cents that is, and then the targets are 715 and 815. So brand new trade I'm introducing there, and I'll publish the details and the backstory on this one shortly. And then another new one is fat cattle. Again, the margin requirement will be PDF. And this is strategy number 345, bull spread in live cattle. Long the Feb, short the June. Risk reward, we're only doing the regular entry. Okay, just level. There's only one level. Okay. Okay. Risk is 400 to make either 610 or 830. And we are looking to buy a dip. So I'm looking to pick it up at 357. This thing was benchmarked yesterday at 440. So we're looking for price improvement down here at 357. Stop is 100 points lower at 257. And then our targets are 510 and 565. Similar to the coffee that I just mentioned, even though it's already gone through that first target, I want to stay with this one for a bit, maybe a week or two, see if it starts to show some softness, and then look for the rotation back to the upside. Just because it went through the target right out of the gate here, I wouldn't necessarily call this trade off. Again, trader's prerogative. You can always do what you want to do. But that's my approach at this time. So we're looking for a dip down to 357 and then a rally back up. So it's bull spread number 345. And again, I'll be posting the back data on this one, backstory on this one shortly, so you can look forward to that. Okay, so 2 new spreads I introduced: bull spread in live cattle, bull spread in coffee. We've got the RBOB that got filled today, another bull spread. And then I canceled the lean hog because basically it did what it was supposed to do, but without us on board. Although, as mentioned earlier, there is some data suggesting again that might be a reasonable strategy to try to get back into. But I'm going to give it a little time to trade and then reassess. Let's put it that way. All right. So I think that brings everything up to speed. If you have any questions, comments, anything of interest, feel free to let me know. I am going to leave it there. And thanks so much for watching.